folks? Welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, June 25th, 2008. Well, what a volatile day today was, folks. It definitely lived up to the hype of being a Fed policy statement day when the Fed released their policy statement as of 2:15 p.m. Eastern Time. And there wasn't really a question in this market whether or not they were going to raise rates or lower rates. That didn't even come into the equation here at InTheMoneyStocks.com. We knew they weren't going to do that. It was more a measure of how their language was on interest rates going forward, which basically told us how the dollar was going to behave, and in tune with the dollar, how oil was going to behave and commodity prices. Now, if they were super hawkish on inflation, that would strengthen the dollar, meaning that they're more likely to raise rates sooner, and that, again, that would strengthen the dollar, dropping commodities and oil prices in the process. If they were less hawkish than the market expected, the commodities, obviously the dollar would weaken, and commodity prices could easily move up. Well, it started out, and we're going to start from the beginning. Today was one of the most active days, especially once the Fed announced, that I have seen in quite some time. Usually we get this crazy volatility right after the announcement. It lasts for half an hour or so, and the market finally finds its range. And what I mean by that first half an hour we talk about that whipsaw, and that's why we really don't try to trade it, because you see massive spikes up and massive spikes down. Well, today it basically lasted all day, and the whips were just unbelievable. You had 5 to 10 point moves on the S&P futures every 10 minutes, and then it would reverse the next candle and go right down. And it didn't just happen once or twice. It literally happened 4, 5, 6 times today, and it was just unbelievable. So we're going to look at those charts today. We're going to talk about our outlook in the markets on the near term, which you guys know has going into July 4th is going to be neutral with a slight upside bias. And as we mentioned, just to note today's market activity, we did see a little bit of a gain in the markets. The Dow was up fractionally at 4 points. The NASDAQ had a very good day today, up 1.4% or 33 points. And the S&P was up about a little more than 0.5% or 8 points. All right, so you got the little bit of that move up. And earlier in the day, we had a great rally on our hands. And we're going to kind of choreograph this play-by-play in this video to give you an idea of what's going on. Then we're going to talk about each chart, whether it's oil's chart or the market's chart, and we're going to focus in on that stuff, and then we're going to talk about our outlook going forward past July 4th. Alright, so let's start with the morning, guys, and we'll look at the ES chart here. Early morning, the futures were trading slightly higher, alright? They were trading up, and we had the durable goods number at 8:30. Now, those of you that were with me yesterday know that really the market was going to focus on two things. No one really cared about durable goods at 8:30, nor did they really care about new home sales at 10 o'clock. Frankly, it was all about oil and the Fed. That's it, oil and the Fed. Well, the market is trending up here, going into the market, and we're getting a nice little rally on this, and this is as oil's trading slightly to the downside. All right, and oil really starts to pick up a little downside going into that 10:30 time frame, and you can see the market reacting right here. About the open, the market gets a push, and then going into those inventory numbers, you see this little pause and pullback. Now, this is for those of us that are technical, experts and love to look at chart patterns. This is a bullish pattern pullback on this chart, and it's basically telling you this is setting up for a move up. Not only that, but it comes right down into that 20 moving average. You don't get a better chart point than that. Not only so we basically have that pullback right here. Oil inventories come out right here, and it's a fantastic build, or better than expected in the markets for crude oil, and crude oil starts to drop like a rock. And those of us in the chat room knew that we had accumulated a little of that DTO, which is a 2-time short crude oil. It's a new ETF. I didn't want to mention it prior because it was for the paid customers in the chat room, but it was we accumulated it, and sure enough, it took off to the upside like a banshee. And off it ran, and I'll show you the chart quickly on that, then we'll come back to this. And here it is, DTO. It's a thinly traded, although it did good volume today, over 1 million, but it was new just about a week or two ago it came out, and again, the symbol DTO as it took off, and look at this move that we caught here. A fantastic move. We unloaded somewhere up here. It went a tiny bit higher, but thank goodness we unloaded there, as it did pull back when oil rallied or tried to rally later in the day. Now let's go back to the ES, because this is where it's more important, folks. So in any case, what we saw here today was the market breaking up as oil began to drop, and oil dropped hard and fast, $4 or $5 in a matter of 20 minutes, 30 minutes. And then what you see is the market, and this is what we talked about yesterday in the video and we mentioned in the chat room, which, by the way, all you guys should really come and join. I can't stress that enough, how beneficial this chat room is for just learning how to trade profitably and doing your best and chatting with other traders and learning their techniques. But nonetheless, we had talked about how after that oil number, around 11 o'clock, expect the market to get quiet in anticipation of the Fed. Well, look at this, guys. And let me just get out my chart trending tools so we can go over this in in key analysis here, and I'm going to break this out so I can draw it. Just like this pattern was a bullish pattern for a pullback right into the 20, this pattern here in the markets set up, and we called for this, is that this is a bull flag, what we call a bull flag pattern. All right, and you can kind of see it here, right? You have the flag here, and then you have the flag. This is the flagpole right here. Then you have the flag right here, and you basically see that there, or you can even draw it a little differently. But nonetheless, we love this pattern. This is one of the greatest patterns, and it basically told us that we were going to probably have a move up in this market. And sure enough, the Fed comes out, and the market races higher. And look at this blast off here. And this is a large move, breaking the highs, and that's what you get off that bull flag. You often get a break of the highs, and you can see it took it out right there. All right, so we took it out, but then all of a sudden, you had a reversal on the next candle and a down wave. And it slammed down again, almost wiping out that whole move. The next candle opens, it even goes down as low as here. So all of a sudden, the market's getting whipsawed one way, then the next. Then all of a sudden, it reverses and goes up here. And then closes down here. So you have a major whipsaw action going on. And then, again, in the next candle, it sells off all the way down to here. And by the way, folks, this looks on this maybe not that big. These are huge moves in the market. You're talking about S&P points of 5 to 10 points, which is huge in the scheme of the market on the S&P. All right, and then again you rally again, and you begin to rally to new highs, and you hit a new high, and then the sell-off starts again, and this time it's a little more significant sell-off. So my point here when we go over the market moves is just to exemplify or make everyone realize the volatility of the Fed here and the power that they have with this market, because they're so influential on the dollar because of their statement. And the dollar controls so much of the oil trade and the commodity trade because it's all traded in U.S. dollars. So if the dollar gets weaker, they have to get stronger just to keep it the same price to the rest of the countries that trade oil and commodities in U.S. dollars. So in any case, you saw the downdraft here, and basically what this coincided with, guys, was look at this. Let's look at the UUP, which is the dollar index, and look at this fall here. So basically what this is telling us, when you see the dollar fall there, you're basically recognizing that the Fed statement was not as hawkish, meaning not as strong on inflation as the market had hoped for. In tune with that, they're selling dollars here, which is dropping this, and this is the UUP, basically the dollar index in an ETF form. And in tune with that, you basically had the USO starting to rally, and we're going to bring this up here. And here's the big drop we talked about on inventories, and then here's the move up after the Fed came out and did their rate statement. So you see a nice little rally there, and then trading sideways into the close. So again, you see oil. Luckily we unloaded our DTO, probably where oil was around this area, right around here. Went a little lower as mentioned, and then you got a nice little move up. And again, the DTO is inverse. It goes up 2 times when the oil drops 1. So for every 1% oil drops, it goes up 2%. In any case, nonetheless, fantastic. Here's the DTO chart, and you can see the fantastic move. Basically from $24.50, got as high as $26.25. For a $20 stock, you can't beat that volatility. So nonetheless, folks, that was going on today, and just a tremendous move overall. You can see it in the NASDAQ intraday chart. Look at the volatility here really pick up with the Fed. We'll have to see where this goes. Now, I want to focus in on the oil trade because it was unbelievable. And I'm going to go to the 120-minute chart to really show you guys what went on here. So bear with me, because we broke a key level going into this, and this is why we were short oil here. And even though oil bounced back, we still think it may break lower at some point, although we'll have to see how tomorrow trades. Today was a fantastic move down, but it was a strong rally. Now, remember the 110 area that was so key on the USO. Going into that inventory number, and this is the beauty of it, and I'll show you guys that in a second here. Going into that inventory number on the intraday 10-minute, we were below 110. So you were about 109.90, and that to me was a signal that on inventory numbers you're going to sell off, because that 110 had been holding for days and days and days. So once we were below, it didn't surprise me that we sold off hard, and what you basically saw here was a test of the bottom. Remember that range we've been talking about for days and days here, the range that the USO, which is the oil fund, has been in, basically from this to this. And once we broke that 110, you knew we were going to test the lower end of that range. And look at that strong sell candle come down, hit the bottom of that range, and then bounce. And you can see it here, testing all these times. So you know how powerful of support this is on this. And again, you tested today, and look at the bounce you got off of it. So now what you're really seeing here is that should we break this channel, whichever way we break is going to be a big move. We slightly, you guys know we kind of favor the downside. Well, pretty much everyone else is favoring the upside, but, you know, we're used to going out on a limb and making calls on our own here. But nonetheless, you're seeing another hit of that, folks, and it bounced dramatically up. And this is where it's basically, it should go. It should go. Based on the charts, when USO finally closes below this channel, you're basically going to look for a move to 104 relatively quickly, we believe, where it would fill that gap from here. Alright, so you have this gap area, which it would probably fill if it breaks that level. Now, again, if it breaks above and closes up here, then watch out, because it could go very much higher as well, and we'll have to monitor that. Alright, folks, and I just want to flip back to that 10-minute here, because I want to show you how it was trading right below. Right here is 110, right, guys? This is the support right here at 110. So going into that oil inventory number, which came out in this candle, it was trading just below, and look at how that reflected it. Once it broke that 110, it was down to the races, and you got to retrace here. We'll see if it falls again tomorrow. We'll see if it moves up. It's up in the air. So keep in mind, guys, near term, we're looking for choppy trading with a neutral bias with a slight upside bias in there. So neutral with slight upside. After July 4th, watch out. We may rally. Come join the chat room. Come join the Swing Trade Alerts. We hope to see you soon. Take care.